Hello, everybody. I want to talk about SoFi. SoFi absolutely smashed earnings, except they only actually beat revenue by around 3.5%. I actually thought they were going to beat revenue by around 4.5%. Pre-market, SoFi was up 9%. When earnings hit, SoFi was actually down 3% pre-market. And now SoFi is up 19%, hitting over 21% for the day at one point. So the question is, what the actual flying F is going on with SoFi? Anthony Noto is one of the greatest CEOs out there. He's literally up there. Not only was he not one of the original founders, he came onto this role. Not only did he buy SoFi shares when the price of SoFi shares was tanking at like $5, but Anthony Noto, when he speaks, he's extremely charismatic. SoFi earnings call was an absolute hit, and Anthony Noto is 90% to blame for that. And by blame, I don't mean anything bad, but he's responsible for this. You see, I was listening to Lending Club's earnings, and it was absolutely terrible. But besides for that, it was absolutely terrible. My ears were bleeding listening to it. Anthony Noto, when he speaks clear, coherently. He has an answer for everything, and any negative that you can find, he has an answer for. A legit, well thought out answer, which shows you confidence in the future growth of SoFi. The main thing I want to say about SoFi, and I'm going to go over a bunch of charts today. I'm going to go over an interview with Anthony Noto, but the main thing that I wanted to tell you is this. SoFi is growing, for the most part, from its personal loans. They actually did not excel in student loans, unlike what everybody thought. But just remember, student loan repayment only started in October. Next quarter, for quarter 3, you will still not see any benefits from student loans, or extremely minimal. In reality, quarter 4 of this year, you should see a shit ton of revenue coming in, a shit ton of student loans going up, and into quarter 1, quarter 2 of 2024. Home loans also did not severely go up. So in reality, the backbone of SoFi's business is literally still personal loans. And I'm going to go over all the charts, but I just want you to understand that there is still, at a minimum, 2 more quarters of growth to come. Quarter 3 and then quarter 4 of when you're actually going to start seeing that short-term growth from student loans. And then, as I told you before, mid-term growth of SoFi is going to come from home loans. And by mid-term, I mean that 12 to 18 months, that 18 months to 36 months. You understand what I mean? Short-term student loans is going to give you right now in the next quarter, quarter 4, for 12 months ahead. There is still so much room to grow for SoFi. I'm going to go over a bunch of charts, but just remember something. SoFi needs less to obtain every single customer. And once SoFi obtains a customer, their net retention is ridiculous because they offer multiple products. They stack them and they cross-sell a bunch of different products. Remember, SoFi not only wants to be the AWS of fintech, of finance, of banking, where they offer you a full stack solution as a business. They want to hold people's hands if you're not a business like a regular depositor throughout your entire life. Be that personal loans, student loans, car loans, your mortgage, refinancing in the future, APYs of 4.4%, investments, so on and so forth. SoFi wants to hold your hand throughout your entire lifetime, hopefully making this a generational partnership, a generational relationship. What does that mean? Once you grow, you're going to have kids, and then your kids are going to have kids, and so on and so forth. And hopefully SoFi becomes an institution, a recognized institution like a JP Morgan or a Bank of America. You see, while most of these digital banks were absolutely suffering, SoFi smashed numbers. But it's not just what's on the surface of revenue EPS. Let's look deeper. Let's go look at the charts, and you're going to see a very, very important thing. charts are going to be looking like this for SoFi, literally like this. It's absolutely beautiful. The charts are going to the moon. Not like this, like this. Okay? Let's go over to my desk. Before I went over my desk, I just wanted to explain to you the thesis of SoFi. It is not dead, it is just getting started. And it's going to be a winner take most market between SoFi and the digital banks, the online banks, while SoFi is going to try to take over legacy banking systems in the future. And remember, they are soon going to be gap profitable at the end of this year. And SoFi is doing everything that they need to do to grow and obtain more depositors. And they're not sacrificing gap profitability today in this quarter or even next quarter in order to do that. They're doing exactly as they guided, exactly as they said they would. And this is phenomenal. I couldn't be happier with this earnings. And it seems like the market, after looking superficially on the outside, superficially at face value, they looked a little deeper. They did some more due diligence, and they found what I believe I found in these earnings, that they're growing at an extremely organic rate. They don't need to sacrifice one for the other. They're obtaining more and more depositors. They're obtaining more and more customers, and they're growing their business acquisition partners as well through Technisys and through Galileo, which actually increased this quarter. Let's go over my desk. I'm going to show you all of the financials. I'm going to show you all of the charts. It's really, really cool. Before I do, if you guys want to show some support for the channel, it's $3 a month. I have channel membership. By doing that, you buy me one of these beautiful cups of coffee. YouTube takes $1. I keep $2. And I do have exclusive videos for my YouTube members where I go over my options plays and just in general talk about more specific, honed in financial stuff, not just general news, but real world financial money making plays, if that makes sense. Let's go over to my desk. I want to show you a bunch of really cool charts. And before I finish, I am going to show you a 5-minute video with Anthony Noto earlier today where he did an interview. It was absolutely phenomenal. Let's do this. All right, guys, if you have not been following him so far, definitely follow Alejandro Chavez. This is his Twitter handle at ALETECHView. And he has this amazing website that is better than the earnings presentation. And it's free. You could do a paid version, but definitely at least get the free version. It says visualstocks.com. And if you go into Visual Stocks, this is what it's going to look like. Let me just make this a little bit bigger. All right, very, very good. Let's just look at this chart right here. Tell me what that looks like. This is the total members for SoFi. SoFi is now at 6.24 million members. They literally went from 5.6 to 6.2. They are growing at an exceptional rate. Look at this chart. It literally just goes like this, okay? There's not much to say. They're just absolutely smashing it. So they went from 5.2 to 5.6, growing 400,000. Then they went from 5.6 to 6.2, growing over 600,000. Tell me what that tells you. That means that their growth is absolutely exceptional. And remember, all of these members, they keep increasing how much they're putting in, and all of these members, they're able to cross-sell, and all of these members are future potential business when they have families and when they grow in life and when they need more loans and they need more money. This is products. So this is the lending products, which is going up. But look at the financial services. So lending is going up at a steady pace, right? Boom, 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 right? That's their bread and butter. But financial services is growing through the freaking roof as well, right? So they just keep offering more and more services. They keep expanding. Check this out right here. This is their revenue segments. This is where they're making money from. So their revenue segments is broken down into lending, which is this neon blue, and then this aqua, which is technology platform, and let's say this bright aqua, or this is aqua and the lending is blue. You see they keep going up, but most of their money comes from lending, as I said. And then you have this little technology platform, and then you have financial services. But check this out. Financial services all of a sudden is starting to get bigger, right? Financial services is starting to go big. Technological platform stays the same, but this is starting to get a little bit bigger, which is good, which means that not only are they making money off of their lending like they always was, right? So lending is like the legacy for SoFi, but they're also being able to make money through other offerings. Okay, guys, let's go into their net income. Let's go into actually from their total earnings, their lending. So their lending is broken down into student loans, personal loans, and home loans. Student loans, as you can see right after COVID, is pretty much stagnant, right? Student loans 15.9, 16.9, 17.3, 17.7, 18.1, 18.6, 19, not really big. However, their personal loans keeps absolutely smashing it, right? So their personal loans were from 10 to 11.6, 13.7, 16.2, 19, 21.4, 24.4, 28.1. It's absolutely huge. And then home loans pretty much stay stagnant as well. What do you think is going to happen, guys? Right? So if you take away student loans and you take away home loans, look at this chart. It literally is going like this again. And I am foreseeing that very, very soon in quarter 4 of this year, quarter 1, 2 of next year, and then beyond that for the home loans, that you're just going to see a chart like this for all 3 of the loans, which means this is when they're going to have a shit ton of gap profitability and a shit ton of money. So then you can ask yourself, well, Adam, why do they make so much money from loans? They don't need to borrow money. They have money. The depositors, they're giving people 4.4% APY. They have a steady stream of customers that keep opening up accounts. That steady stream of customers that keep opening up accounts is what's bringing in money. Check this out. So the steady stream of customers brings in the money in order to do this. It's absolutely freaking huge. It's absolutely freaking huge. They have a shit ton of money coming in. And the best thing is, check out the FICO scores. The FICO scores keep going up. So the FICO scores of their home loans is going up and their personal loans is staying steady. So the FICO score of their home loans is 758. The FICO score of their personal loans is 747. And their student loans is a little down for 769. FICO score is your credit. These numbers are freaking tremendous. They are absolutely huge, and they are a trendsetter when it comes to banking. This is one thing that they were falling behind, and this is why they actually went down last quarter. So in quarter 4 of 2022, this was their clients and the total platform accounts for Galileo. Then it dropped over here, but Galileo started coming back right here in quarter 2 of 2023, which is very, very, very important. And this final chart is growth versus the top 10 banks. All you need to see is that as SoFi Bank was going down a little bit, now they're retaining this right here, and they're almost where they were at an all-time high right here in quarter 4 of 2022, which is 107. Right now, they're around a 101. This is very, very important, and I believe they're going to keep gaining. Over here, as you see, these are all the other banks right here. SoFi keeps gaining market share. And this is what Alex Noto was saying, that we are going to be a top 10 bank. This is what he's talking. Before these earnings, SoFi was a top 100 bank. They just broke into the top. I'm going to show you this interview from Anthony Noto, but bottom line is this. Last quarter, SoFi grew by over 40%. This quarter, SoFi grew in the mid 30%. SoFi is a growth stock. SoFi is a growth story. As SoFi's revenue goes up, as customer base goes up, as lending products go up, and cross-selling different products is going up, SoFi is going to grow. SoFi is going to continue to exceed and outperform in the future. SoFi right now is trading around 18% up. These earnings were absolutely amazing. And you don't need to understand much about charts. All the charts I showed you were pretty much like this. And that's all I really got to say about that. SoFi is going to keep growing. Their relationships are going to keep growing. They're spending less and less money to acquire every single customer. And every customer that stays, that is acquired, is doing more net retention, which means that they're getting more and more products, spending more and more money, spending or acquiring different types of products, and generating more revenue for SoFi. I'm going to play you this 5-minute clip from Anthony Noto. He was on CNBC earlier today. He can say it better than I can. I couldn't be happier for SoFi. I am so happy that I bought in shares right around that $5 range. And I'm even happier that I bought a shit ton of options because they're doing quite well. Thank you very much. Enjoy the rest of this video.
Joining us now is the company's CEO, Anthony Noto. Anthony, it's great to have you. Your adjusted EBITDA, $77 million, you had 16% margins, 10 full points above a year ago. And I'm just curious what you did and what you're continuing to do to see that kind of margin improvement.
Well, first, David, thank you for having me. The biggest thing is that when we started to architect a business 5 years ago, over 5 years ago in 2018 when I joined, we really focused on making sure we had the right unit economics by product. We have 4 lending products. We have checking and savings. We have invest product, a credit card product. And each one of those we've sort of architected so they'll have very high variable profit. We're just getting to the point now where our financial services segment is starting to be profitable. So the lending business on a contribution profit basis has been very profitable. The technology business also pretty profitable. But we've made a big investment in the last 5 years in building out the number of checking savings accounts and acquiring them, as well as credit card and invest. And we're now to the point where we're covering all of that acquisition cost. We only lost about $4 million of contribution losses in that segment, which improved to $20 million versus Q1. And in Q4, it was negative $44 million. So what we're starting to see is the scale of that variable profit exceed the acquisition cost, which is now dropping to the bottom line. So great leverage in the business. Our incremental margins were over 40% on an EBITDA basis and over 30% on a GAAP net income basis.
Right. Well, you mentioned, okay, that operating leverage and certainly the promise of it seems to be helping shareholders feel very confident about buying the stock. Something else, I mean, you added a lot of deposits. Now, you're paying a good amount for them, over 4.2, 4.3%, but $2.7 billion sequentially. How important is that for you in terms of fueling, your ability on the other side of the balance sheet?
It's a critical point in driving both growth and profitability. So those deposits are actually a lower cost of funding for us than using warehouse lines. And we've had the bank for about a year and a half. We've added more than $2 billion of deposits sequentially each quarter, 2.7, as you mentioned, this quarter. The interest we're providing is 4.4% APY on savings if you do direct deposit. But that's actually a lower cost than what we'd be paying the big banks and warehouse lines. So it's a lower cost of funding and a more stable type of funding. 90% of our nearly $13 billion of deposits is from direct deposit customers. We want to have that primary relationship. So we benefit in 2 ways. One, we have the spending that they do in that checking savings account, but their deposits help fuel the growth of our lending business. And we're one of the few banks that not only provide a high APY in deposits, but we then use those deposits to drive even better returns through our loans, which have high yield, much higher than a 4.4%.
Anthony, we're showing the stock chart, and the stock has had a monster run this year, up 150% almost. Even just since mid-May, the stock is up about 75%, and a lot of that is on the move by Congress to say, folks with student loans, you got to start paying in the fall, and then also the Supreme Court knocking down President Biden's debt forgiveness plan. Some analysts on the street, though, are worried about that notion that there is a big opportunity around student loan refinancing, that is perhaps smaller than what investors think there should be. And so I'm wondering if you could walk us through what you're seeing so far and if you can address that concern.
Yeah, the interesting thing that I'd point out in this quarter is that we had our 9th quarter of record revenue. And that was driven by record revenue in our technology platform revenue, i.e. not lending, and our financial services business, which also had a record quarter. So it was the first time in our history that in our 9th quarter, that record was driven by these 2 non-lending businesses doing so well. Our lending business has continued to do well also, but the diversification is what's being recognized. As it relates to student loans, there's 40 million Americans that still have federal student loans that they haven't refinanced. SoFi, in our history, has not financed more than 1 million people on their federal student loans. So there's still 39 million people out there for us to help lower their cost of paying back their student loans. But that's on the come. That wasn't in this quarter. This quarter, our student loan business was still relatively depressed. We don't expect to see a meaningful pickup until the end of the year and going into 2024. But the larger thing I'd focus everyone on is that there's 40 million people that still have expensive federal student loans, and we can help them lower their cost on an interest rate basis or on a monthly basis by extending the term.